Imagine a world where your money has an expiration date, or a world where the government can look at your bank statement and decide that you've bought too much red meat this month, or that you shouldn't be allowed to donate to a specific cause. This isn't a scene from a dystopian novel. It's a very real conversation happening right now in the halls of power across the globe. We are talking about Central Bank Digital Currencies, or CBDCs. While supporters claim this is the natural evolution of banking and digital currency, critics are sounding the alarm. They believe we are standing on the precipice of the greatest surveillance tool ever invented. Is this the end of financial privacy as we know it? Or is it just a necessary upgrade for the digital age? Today we're breaking down everything you need to know about CBDCs, how they differ from Bitcoin, and why your freedom might depend on the fine print. Before we get into the controversy, let's define our terms. What exactly is a CBDC? Currently, most of the digital money you use, the numbers in your banking app, is actually a liability of a private commercial bank. When you swipe your debit card, you're moving credit within a private system. A central bank digital currency is different. It is a digital form of a country's sovereign currency, issued and backed directly by the central bank, like the Federal Reserve in the US or the ECB in Europe. It's not a cryptocurrency like Bitcoin, which is decentralized. A CBDC is the ultimate centralized digital currency. There are two main types: wholesale CBDCs, used only by banks and financial institutions to settle large-scale transfers. Retail CBDCs, this is what affects you. It's a digital wallet held directly by the public, allowing you to bypass traditional banking intermediaries. So why are governments so eager to build this? They promise faster transactions, lower fees, and financial inclusion for those without bank accounts. But as the saying goes, if something is free, you are the product. The biggest concern surrounding the CBDC rollout is privacy. Think about physical cash. If you buy a coffee or a secondhand book with a $20 bill, there is no digital footprint. That transaction is private. It's between you and the seller. In a CBDC system, every single transaction is recorded on a centralized ledger. Because the central bank is an arm of the government, this gives the state a god's-eye view of all economic activity. In a purely digital system controlled by the state, anonymous spending becomes impossible. Every purchase you make, from the medicine you buy to the books you read, becomes a data point. In the wrong hands, this data isn't just used for taxes, it's used for profiling. If you think your current credit card company collects a lot of data, imagine that data being held by an entity that also has the power to arrest you or audit your entire life. This is why many experts argue that a CBDC is the final nail in the coffin for financial privacy. The most chilling aspect of a CBDC isn't just that they can see what you do, it's that they can control what you do. This is known as programmability. Unlike the cash in your physical wallet, a digital currency issued by a central bank can be coded with smart contracts. This means the government could, in theory, put restrictions on your money. Expiration dates. To stimulate the economy, the government could decree that your stimulus check or wages must be spent within 30 days, or they vanish. Social engineering. They could limit how much gasoline you buy to meet carbon footprint goals. Political debanking. We've already seen glimpses of this. In various countries, protesters have had their bank accounts frozen without a trial. With a CBDC, this process becomes instantaneous and automated. When your money is programmable, it ceases to be your property and starts to look more like a permission-based voucher. We also have to talk about the impact on the banking sector. For decades, commercial banks have been the gatekeepers of the economy. They take your deposits and lend them out to businesses and homebuyers. If everyone moves their money into a risk-free CBDC account directly with the central bank, what happens to the local bank on the corner? They lose their deposit base. This could lead to a disintermediation of the banking system. While some might say, good riddance to the big banks, there's a catch. If private banks can't lend, the government might become the primary source of credit. This means the state, not the market, decides which businesses get loans and which ones wither away. This moves us away from a market economy and toward a centrally planned one. Is this just a theory? No. It's already happening. China has been at the forefront with the ECNY, digital yuan. They have already integrated it with their social credit system. If your social score drops, your ability to spend your digital currency on things like high-speed rail tickets or travel can be restricted. Nigeria launched the e-Naira, and many other nations, including the UK with the digital pound and the US with a potential digital dollar, are in various stages of research and pilot programs. The global race is on. Proponents argue that if the West doesn't develop a CBDC, they will lose monetary sovereignty to other nations, or to decentralized assets like Bitcoin. But the cost of winning that race might be the very liberties that define Western societies. The era of digital currency is inevitable. The technology is too efficient to ignore, but the type of digital currency we adopt will define the next century of human freedom. Will we move toward a system that preserves privacy through encryption and decentralization? Or will we sleepwalk into a CBDC system that trades our autonomy for the sake of convenience? The best thing you can do right now is stay informed. Understand the difference between digital money and programmable control. Use cash while it's still an option, and keep an eye on the legislation being passed in your country regarding banking and central bank overreach. If you found this breakdown helpful, make sure to hit that like button and subscribe. We're going to be following the rollout of these digital currencies very closely. What do you think? Would you use a CBDC if it made your life easier? Or is the loss of privacy too high a price to pay? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.